Imagine this. You have a perfect trading strategy with 1 to 3 raised to reward ratio. You buy over here and take profit here. You sell over here and take profit over here. So you decided to backtest this strategy and then created a solid working trading plan. Now next, you went on and started trading it live, and here's what happens with you. Scenario number 1. You take a trade over here and the price starts to move in your favor, and just before it hits your take profit, it drops back down and takes your stop loss. Situation number 2. You enter over here, the price first takes your stop loss and then move in your favor and maybe even hit your take profit. I know situations like this are frustrating and it leaves you wondering, this plan was working so well when I was backtesting it, then why isn't it working in the live market? And the problem is very simple. The problem is that the market is dynamic and ever changing, but the plan that you created is static and not flexible at all. Think of it this way. Let's say that you want to travel from A to B and you have a map for it which says that it will take you 5 hours to reach there. So you start your journey, and while following the path given on the map, you found out that one of the road is closed, and so now you have to detour. Or let's say that the road has a lot of potholes, and so instead of taking you 5 hours, it took you 8 hours. Now what I'm trying to say over here is, when you create a trading plan based on backtesting, it is like you are using a map. But in the live market, what you need is flexibility, and therefore you need a GPS that helps you adapt to the current market conditions. And here's how to solve this problem. I have divided the solution in 2 parts. And part number 1 is always create your trading plan on live accounts. And I know you might be shocked or even surprised to hear it, but that is how you create a working trading plan, a flexible trading plan. What you need to do here is allocate 5% of your entire trading capital to a small live account. And what I mean by this is, let's say for example, you're going to start your main trading account with $10,000. So 5% of it, which is $500, should be used to start a small live account, which you will use to help you create a flexible trading plan. Now, when you create this account, what you need to do next is take only 1% risk per trade and use this account to create a trading plan. And how you're going to do this? By trial and error method. You're going to keep on changing things, find out what the mistakes are, what the problems you are facing, and then maybe find out solutions to solve it. And here's where comes the next part, which is part number 2, making your plan dynamic. Most traders create a rigid trading plan that doesn't work on live markets, because the live markets are continuously changing and you need to change and adapt as per it. For example, let's say if you are having problem with take profit, let's say that the price is moving near your take profit, but then it's dropping back down and you are not able to keep any of the profits that you initially made. So in this case, what you can do is use Bollinger Band, or let's say ATR, or you can use trailing stop loss. Even then, if there are conditions that ask you to change the plan, you should be happily able to change it.